All right, cool. Let's go and get started. I think we're just gonna follow up to what we talked about on Wednesday, and which was, I believe we were here. Wait, this is Friday, Thursday. So we were Wednesday's closure here, and what I said last week was pretty much looking at effort. This was struggling to pretty much keep going higher, and we were trying to see if this was going to become unstable to the point where we would see downside movement. Obviously we didn't, and what happened Thursday was there was a pretty strong reaction from H4, and let me show you guys. I didn't have the chance to backtrack it, but what's worrying me here is Thursday's closure. So when we have a bullish closure here, and honestly, any upside move doesn't really interest me. It just becomes one of those situations where I just want to wait and chill, unless we obviously get like a nice little intraday trade, because we're still looking at a possibility of returning to a weekly inefficiency, or even at least this inefficiency here. But honestly, if we reach here, we'll probably reach back up here to either previous low. So now, following up from Wednesday, noticing the effort that from the daily time frame that it took to retrace this high, the same thing happens on H4, because now what I'm seeing here is this reaction here, and the possibility, this is so annoying without a mouse, is the possibility of seeing any type of movement to the upside because of this reaction here, right? So I don't know if we can figure out exactly where this came from. Off the bat, I see right inefficiency fill here. We don't care for that, for picking that low, but when we start zooming in, it starts making more sense, which is where that NFP play came in on Thursday, right? We see the reaction. Right, we see the reaction from a point of interest. From there, we get a reaction. You could say it tests previous scalping structure, but what I care about is seeing what happens when this returns back to premium. Right, which happened here. I mean, back to discount, I'm sorry. When it comes back here. Right, and if we zoom in, right, this is obviously your area of interest. This area here, you can see that this is where we came down and gave a reaction to the upside. Right off the bat, just seeing from here, yes, this is our first bearish candle, but remember that we acknowledge wicks as well. Right, so zooming in here, right, we see that before the rally started here, that started pretty much as BOS, that fully took out previous structure, right? This previous low had to be taken out for whatever reason that was here. I don't care for whatever reason that was, but I care that this reacted and it left a blueprint, right? So when analyzing this, I care for the open, right? Even the closure, because now that becomes a point of interest. Obviously we can zoom in. I don't want to right now, just because this is probably going to be really slow. But you guys understand what I'm saying here. We took out a previous liquidity point here to this candle, gave a reaction to the upside. That now becomes a point of interest. And what happens after that? Right, we clear a previous point of liquidity, but if anything, this could just be an inefficiency fill from here to here. to continue lower. But we're acknowledging the fact that we just reacted from a potential POI, and we've now found a POI to play off of, right? So reading narrative from the inefficiency fill to then try to play a reaction. And from there, you see that we're in session, right? 7:15, 7:30, which was the catalyst of NFP. And that came back to our point of interest right there. And as you can see through the time frames, right, that zooms out to be that previous wick there. And this is the DXY play. So obviously we're not trading this. So looking at Euro from the exact same play, right, we see the reaction, which this was the 50% inefficiency for for DXY. I don't believe it reached that high for any other pair. Yeah, no, that would honestly take a while to reach that. But you guys are understanding what I'm saying here. And pretty much, this is Thursday the 20th. Oh, this is so irritating. Right, so looking at this, yeah, this is honestly really fucking irritating. My bad, guys. All right, so when we're looking at this, right, we topped out during London session, right? We gave a reaction. We zoom in, right? We now have a reference point here, right? And keep in mind, we're playing this off of DXY. So we now see a range forming prior to our session. We now take one side of liquidity, obviously for the reason of trying to play a previous candle, which could have easily been here, right? Notice, right, candle takes out a previous candle, which means that there's some type of liquidity taken there that now becomes the reference point from the open to the high, and that is your point of interest. And that happens straight through, I think right after NFP. Yeah, it was right after NFP. And from there, right, we take out one side of liquidity, then we take the other, and that pretty much breaks structure, pulls back. I believe it returns to premium, which it does there. And then that was the continuation. And that was the play, right, that technically was counter trend, but looking at from an intraday perspective, right, you see that now we topped out on very unsupported volume. You can see there, very unsupported. Gave a reaction off of that, tested a previous low, and we didn't just react from the low to then continue. We stayed here. We struggled here, which means that based off law of effort, this is now struggling to come up, and you can tell by the corrective nature. So we now come back to the point of interest, right? The volume honestly doesn't matter to me here because it's a news event. So obviously there's going to be volume coming into the market. So when it comes to news events, I don't really care for that. But what I care about is everything else, structure, right? The return to premium from these two swing points, right? And then the point of interest, which then created the downside move, right? And what I hate about that is that it gave a nasty closure, right? Which is why, honestly, it isn't the worst thing ever, because remember, we do want that pullback. And now it's really looking like it wants to give it to us. And it's at a point where EU is just stalling. So pretty much our bias can change literally every single Zoom call, because we got to play based off what we're given, not anticipate and guess what's going to happen, right? So we're obviously still looking at a reference point there. And depending on the speed that it takes to reach here, we're going to see if it's possible to even reach down here, right? So does that make sense? Which candle? What pair? DXY. Oops. Why not the entire candle? Why would you use the entire candle? Right? What are the SC rules? What 2 points do we reference? Open at 50%, right? So why would we use the entire candle? Yes, it would, but I'm assuming that this is an SC because it takes out a previous point of liquidity there. This is what I'm referencing to. Does that make sense? Yeah, I did. Right, but remember, I started introducing this, the concept of assuming recently, very, very recently. Right, because now, honestly, if you were to use the whole candle here, that would more than likely be considered a quote-unquote order block. But because we understand SCs, there's probably an SC inside that candle based off the reaction that occurred. Right, and what's pretty annoying is that this didn't give that, right, which is usually what we look for. But you got to use intuition here. We have the play here. We now have a rejection candle and an engulfing. What more confirmation do you want there? Looking at EU for the same time. Right, it even looks better than DXY, honestly, because, right, although from the 15-minute I said that we see a ton of volume coming out of nowhere because of NFP. Right, if you zoom into M1, you still see it. Oh, this is so irritating to maneuver. Right, you see price struggling to now come higher, and you can see it in the volume. Right, although it's subtle, it's enough because you're still playing off this confluence, which is then playing off this confluence, which is then playing off this confluence, which is then also still playing off the confluence of premium pricing. Right, so it all adds up, it makes sense, it occurs. If you hold control. Oh, that's so cool. That's cool. Thank you, bro. Yeah, I don't know the functions for TradingView. I'm sorry about that. Right, but it makes sense. Look, just even taking out everything from here, right? The setup itself, candle of interest, volume decline, premium pricing, we took out the range high, we're coming into session, right? This becomes unstable, this upside move causes the bearish reaction. You even got a pullback here, there, which it actually filled. Cool, I'll look into that after. I'm gonna leave that there. But yeah, does that make sense? All right, we're just at a point where the bias can change every single day, which is why you have to be attentive to each session, each trade. I mean, not each trading session, but each overlap session, just to see what occurs, and then pay attention to daily closures. Because what I'm worried about here is this very iffy closure, which it really doesn't show whether or not we're bullish or bearish. Right? Obviously, there's more wick, but we're seeing the effort that it's taking to continue lower. So like I said, you just got to pay attention to intraday now, just to see where you get an opportunity. Right? So it's literally our bias can change every single zoom because of the sole reasons of what happens intraday. Right? So honestly, this might even continue lower because we broke that previous structure point here. So it's just, who knows? We could even have a range and have the same thing happen. Catch something up here, come lower. Yes, it did, but be cautious that it is Sunday. Right, we're gonna open on Sunday, so I'm gonna wait and see what happens Sunday during London, and then to see what happens during overlap. Right, I don't even chart up like at all on Sundays, just because I don't really care to see how it opens. I want to see what happens during London, because that's much more important than the open. But it's just looking very, very sloppy, honestly. And what we can't mess up with here is we can't force trades inside the range. Right, remember, always buy at discount, sell at premium. Right, try to avoid staying in the middle. Because honestly, you never know. Because yes, we had a nasty closure Thursday, but that's a pretty bullish closure Friday. You know, so it's, like I said, we have to wait for those closures and wait to see what kind of intraday plays will give us opportunity. Right, does that make sense? Cool. Do you guys have any questions before we get to that topic that I want to talk about?